Hey everyone, happy holidays. Merry Christmas is amongst us, yet it is Wednesday at 12:15. You know what that means. It's the Orlando Homeowner Show. I'm Rick Bosley. I sell real estate in Orlando, and today we're talking with a longtime friend of mine, also a mentor and colleague, and just kind of person who I've always looked up to an aspiration in terms of what he does really well. And there's two things amongst many he does well. One is commercial real estate. The other one is multifamily investing. So stay tuned because today we are with Tony Nguyen, CCIM investor. So we'll be right back, talk about commercial real estate. We'll be right back. Where are we at? Come on now. All right, you're stretching. Careful there, Tony. We've got you live now. Can you hear us? We had that's our first technical difficulty. This is episode 8, and I didn't have to double click, so maybe I got to check my batteries that intro. But thanks for jumping on and joining us to talk a little bit about the commercial side of what's happening in real estate.
Yeah, happy to be here.
We are live, so as always, if you guys are watching this in the hours of 12:15 to 12:45 on either one of the streams, make sure you add some comments, questions, what you like, what you don't like, or anything specifically for Tony or I. We can respond. Jason, thanks for the shout out. We can always count on Jason. He's our consistent viewer who's always here. But Tony, I want to talk to you. We've dove in a lot in these past 2 months of what has happened in the real estate industry. We've talked with insurance brokers and mortgage brokers. We've looked at market stats of residential real estate. Yet I'm concerned how that translates, what's similar or not in terms of commercial. So real quick, can you give us your 30-second resume of what you've been doing and why people should sit down and listen to what you've got to say in terms of commercial real estate?
Well, I started selling houses about 20 years ago. 10 years ago, I started doing investment sales on the commercial side. And to date, some of the things that we deal with on a daily are brokering shopping centers, investment sales. We have over 100 apartment units. We've bought, sold, and flipped retail buildings, office buildings, own 5 restaurants, and currently started a development arm in the company this year.
Sweet.
So that's in a nutshell. That's what we got going on.
You did that in under 15 seconds of the vast knowledge there, which I love because a couple things are new even since I've done it. When's the last flip you've done of a commercial of a shopping center?
Last year,
Okay.
Bought a shopping center, which is interesting because with investment sales, whether it's a shopping center, office, warehouse, multifamily, when you talk about flipping in the traditional sense, a lot of people think you're going to go and change the flooring, paint the house, and then boom, you've got yourself a flip, just like you see on HGTV. But when it comes to investment sales, a lot of times, like the flip that I did and some others I've done, has nothing to do with what you see on the physical appearance of the building or the property. It has to do with how do you look at a profit and loss statement? Where can you decrease expenses and increase the income in order to bump up that bottom line? And based on the bottom line, the banks will look at it and say, hey, since you're making this much money, here's how much we evaluate it.
Yeah, I was going to mention, someone mentioned that before. Actually, I was talking to Yin Yao, and he bought a multifamily, and he did the same thing. That says it's not the same thing as flipping, because an appraisal, when you look at single family, says what's the market show in terms of recent sold. However, an appraisal with commercial is what is going to be the cash flow or the cumulative rent you would gain from that, right?
Exactly.
So you're going, if I can create better margins, increase rent by renewing contracts or getting higher paying tenants, reduce some expenses by adding better AC units or double pane windows or insulation, all of a sudden you can sell this as a better ROI. Therefore, your appraisal just went up.
That's exactly right. Right. So yeah, in a nutshell, there's that. Instead of just seeing what you see on the physical aspect of the property, definitely dig into the numbers and see what's real, what's fake, and that kind of thing.
And I don't have a specific agenda because I'm just going to talk shop with you for a little bit. When we hear the phrase through commercial of single tenant, triple net, that's where your tenant is actually paying all those utilities. So reducing expenses really isn't your issue as a landlord. You're just almost giving them the building and they pay for everything maintenance. So that wouldn't work for that single tenant, triple net, right?
Yes and no. So when you talk about single tenant, triple net, we have to first dig into what kind of lease is there, which is not, you can't tell what kind of lease is there by seeing the building. You have to figure out literally what kind of lease. You've got the one where you mentioned, which is called an absolute triple net, where let's say if it's let's say it's McDonald's, right? McDonald's will say, hey, we'll rent the building and pay you $150,000 a year. In addition to that, we'll pay for all the insurance, taxes, roof, foundational structure, HVAC, anything. They take care of A to Z. The landlord will literally just mailbox money, right? Just every month,
Yep.
that's a check.
Yep.
But let's just say if you rented it to, fill in the blank local restaurant, let's say, a lot of times they're not familiar with the absolute triple nest model. In addition to that, the landlord who's renting to the mom and pop, he's probably not familiar with it either, which it happens, right? So to answer your question, it really boils down to how the lease is structured. And let's just say, again, to your example, if it is McDonald's, you're right. Change the expenses around won't change anything. It really boils down to how much can you get the tenant to agree to pay, and that can come from a position of how much free rent you can give them up front, or perhaps you say, hey, you rent my building, I'll give you $1 million to help you with your build out,
To rehab it.
yeah, to rehab it or whatnot, but then you'll pay me this much, and based on that number, again, you go back to the bank, and the bank will give you a certain amount of valuation for it based on what they pay.
Well, that's interesting because on the other side of it, when we've renegotiated our leases for our real estate offices, we've done the first year is half rent, and then year two it comes to this, and they give us $40,000 to expand it, right? Because they gave us a blank shell with concrete. We needed to make it look like an office. When that's the case, are they writing the check for the 40 grand, or we took it as just a rent reduction that we're not going to pay you?
Right.
We'll have a savings of it. So it actually doesn't cost the landlord anything besides foregoing that $40,000 in this instance.
Right. So on that example, let's just say Keller Williams' office got the $40,000 incentive, but then because Keller Williams was willing to pay the landlord X amount of rent, he takes that to the bank, and now the bank's going to give him an extra, let's just say like $400,000 in terms of cash out refinance, based on what they're paying. So a lot of times up front, as a tenant, you're getting $40,000. That sounds great, which is a win for them. But the landlord, his win is that, hey, he's going to take this brand new 5-year lease now, go to the bank, and the bank's going to give him hundreds of thousands of dollars in order to make that happen.
So my 5 to 7 year lease increased his value. He went over to the bank, got a equity line of credit, and then took that equity and went and bought another commercial building with it.
Exactly. So as an example, I've got a buddy now who's got a vacant piece of land. Starbucks wants to lease there, but they say, hey, I need you, landlord, give us Starbucks $1 million to help with our build out. And he's kind of tossing and turning. I'm like, hey man, look, Starbucks comes to you and all they want is $1 million. Once they sign that lease and they don't put a Starbucks there, you're worth $3 million, right away based on what they're willing to pay. So I was like, hey, $1 million may look like a lot up front, but you're going to make $2 million on the back end. So just make it happen. So,
Man, this is fun.
Yeah.
I want to circle back if we have time, because we only have until 12:45. Let's talk a little bit about what is happening in the commercial industry in terms of the market. And I know you're in the real estate game a lot, yet the residential market, interest rates have stayed sub 3. 2.7 was the average last month, 2.7 interest rate, which is the lowest in the history. Market has gone up between 5 and 10%, depending where you're at year over year in terms of price point. Everything is showing that the market's going to be as strong as any in 2021. It's still going to stay a seller's market. Inventory is still low. Prices are still rising because affordability is low. That's the residential snapshot. Can you give me what the snapshot is happening in terms of commercial? Is it that easy? Because I know there's about 7 different segments of commercial. You've got the retail, you've got the multifamily, you've got the warehouse. How can you, if I were to say, how's the market? What can be your elevator speech back?
Well, whenever someone's asking how is the market on the commercial side, like you said, there's many different facets. You've got multifamily, office, warehouse, retail, hotels, vacant land, and self-storage, for example. And for example, with us, we focus on shopping centers only, which is AKA retail, which is the sector that was hit the hardest in terms of since the pandemic happened. Now, ever since back in March, April, some of the higher level investors I've worked with, right out the gate, started just offloading properties and just getting rid of it, because at that time, I mean, rewind this a few months, no one knew where the will would be now. Everyone was freaking out back in March and April. So at that time, a lot of the investors, the high level ones, were wanting to unload properties and just wait to see what happens. Some of the guys who were really aggressive buying, hey, we're pumping our brakes. We got to wait 6 months and see where the market's at. So fast forward till today, the conversations I'm having with sellers is, hey, you either sell it today or plan to hang on to it for at least 5 years, because based on the reports and what we're seeing from a lot of the data, but then also what the appetite is for buyers out there. Buyers right now are looking for deals. They're not willing to pay what they were paying a year ago. They definitely want a adjustment in pricing um, to be ready for any type of issues that may rise next year. Because let's just say back in March, April, May, there was a shutdown, there was PPP money and that kind of thing. So businesses were doing okay. But then when you got to about September, October, November, me as a broker, I was starting to get calls from landlords saying, hey, Tony, this restaurant, that restaurant is asking for a rent reduction. How do I deal with it? Do I give them for rent? What do I do? And what I saw a lot of was that, early on in the pandemic, when people still had reserves, let's say, right? Restaurants, they still had reserves and they were still living off of revenue from a year before or whatnot. They were doing okay. But the business is declining 25, 50%. And then now everything's going to takeout. And now they're pairing up and partnering with Uber Eats or whatnot, which I think they take 30% or so. It really hurts their restaurant revenue. And they're paying for a big space. I had this one case where the restaurant space is 5,000 square feet, but now there's no dining in. There's no dining in, so they don't need all that space, and everything is takeout, and their overhead is still based on that 5,000 square feet. So I've seen that more and more. I've seen restaurants that can adapt to the new model, meaning that takeout, delivery, curbside takeout. They're adapting to that perfectly fine. Even though they are adapting, they're still down in business 25% or more. Yeah. Then they're also going to be those folks who just can't adjust. They're maybe not, they're unsure of the technology. They're against the fees, whatever it may be. They're struggling. They're really struggling. And, yeah. And I mean, I'm sure you see the headlines with restaurant industries in general.
Well, when we look at what was hit hardest is hospitality and service industry, right? We just talked about that last week of the recovery that's happened in terms of goods. That's right back where it was. People are still buying the same goods they were doing, from consumer to electronics. So the consumers are less concerned with, do I have money? They're still going out and spending money on the goods and Christmas gifts. They're not spending it on Disney World trips and dining out, like you mentioned. I was talking with a vendor of mine. He's a DJ, and last year, 2019, he had 43 corporate Christmas party events that he DJ'd for. This year, he had 2. Right. Yeah. So if that's a correlation, that's 41 less corporate events that went out to conferences, to catering, it's been impacted hard. So what's interesting is what I hear from you of going, it has impacted you guys because the way in which the mom and pop or even the franchise runs their business has changed, and they're coming back. Do they have a leg to stand on? If you're my landlord and I have my real estate office and we've got 100 agents, yet only now 20 of them show up, and I've got all of a sudden 80% vacancy, yet I'm going to contract with you to 2023. Do I have a leg to stand on, or to go back almost like I'm going to renegotiate now, or I'm going to just default on it? Or what are you seeing out there in terms of that rock in a hard place that these businesses are at?
Depends on the landlord you're dealing with. Though the landlords who are prepared, they've got the cash reserves, they understand market cycles, aka the larger landlords. They just understand that, hey, we're prepared to weather the storm. We realize that this cycle was going to end, and hey, it happened, and we've got the cash to weather the storm. Just like restaurants, just like any other business, where if they've got the cash reserves and they weren't leveraging everything to the extreme, they've been prepared. But then with landlords who are not prepared, they're going to buckle in. All right, fine. I know that you're paying whatever $10,000 a month in rent. What can we work out? And they're going to do whatever they can to keep them there. But again, if you don't ask, you don't get, right? Like back when March, April happened, Starbucks sent a letter to all landlords saying, hey, we're not paying rent because of A, B, and C. I think LA Fitness did the same thing. Many retailers did. So it goes back to who's your landlord? Are they, how strong are they financially? Are they ready to prepare to weather the storm or not?
Yeah.
And that's what you kind of have to figure out. If I were a tenant, I always say, hey, if you don't ask, you don't know, right? So you just put in the ask, and you know
Out
what
there.
you're gonna get. Yeah.
Well, and this is some good wisdom out there. If you're listening and you are a business owner or looking to be a business owner, when you're looking for your space, you're not just interviewing the space for your business. You're also going, who's my landlord? What kind of reserves, what kind of reputation do they have, so that if this does go on, do they have to forethought, or are they going to foreclose on, and all of a sudden you're sitting in a foreclosed shopping center that
Right.
you're paying the bank
Exactly.
rent to? Yeah.
Yeah, and then and also on the landlord side too. I mean, as a tenant, yes, ask for it, but landlords a lot of times they'll push back and say, no, we can't, because they still have to pay the mortgage, pay the taxes, pay the insurance. I mean,
Yep.
it's a laundry list of expenses to keep the building operating, right?
Yeah.
So it really is a rock and a hard place. You're trying to
Yeah, it
figure
gets on a different scale. If I've got a single family home and my tenant who's paying me $1,800 a month gets furloughed, and they go, hey, I don't have income anymore. I'm going to live here for free because you can't evict me and I
Mhm.
can't pay you anything. Or let's see if we can renegotiate. It would behoove me to go, all right, what can you pay? Go ahead and give me 1,000, and then we'll figure out how we can do it after 12 months from now.
Yeah, that definitely gets tricky. And
Yeah,
although there are orders in place to not evict, I've seen cases where you can evict them based on certain things.
you can or
But
can't. You said you
you
can.
can, you can.
Okay.
Yeah, personally, for me, I was very fortunate to not have to deal with that many evictions, but there was one really bad case. But the way that the group was able to get around it was just because there was no lease in place. The lease had expired already, and when the
Mm,
lease is expiring, there's really no lease to enforce. And because of that, depends on your attorney too. The
yeah.
attorneys have to get involved, and it becomes this whole big ordeal. But for the most part, as a landlord, a responsible landlord, you got to work with the tenant to keep them there. But it gets to a point where, let's say, if they're causing issues with other tenants, or drugs are related, or if they're doing things they're not supposed to be doing, not taking care of the
Okay.
property, there are certain precautions in place.
There's ways to get out from
Yeah,
a different legal standpoint versus not paying.
yeah, because there's some people who completely take advantage of it, and that's what, as a landlord, you be careful of. But then there's also the very humanized side of it, where if someone's struggling, really not to any fault of their own, it's just COVID-19, right? Yeah,
Yep.
that's where we step in and try to figure it out.
So knowing that we still don't know when COVID's going to be done, right? Vaccine phase 1 is out, and some people want it, some people don't. We don't know when the 25% ban is going to happen. We don't know when normal is going to get back, and maybe it's not. Maybe this is the new normal. You said sell today or hang around for 5 years. So your forecast, that I'm not going to hold you to, but this will be forever lived. This will be forever documented. Is the commercial industry going to take a back step in terms of its market value?
In terms of market value, I definitely think so, because when you talk about, well, actually, let's take a step back. When you say commercial industry, we have to sector it off, because like multifamily and
Yeah, so
industrial.
yeah, so let's go retail,
Yeah.
or office, right? Let's do where you had people running businesses
Mhm.
in commercial buildings. So from the real estate office to the bank that only has 3 people at a time walking through it, to the restaurants and bars.
It's almost inevitable to think that values won't go down, and the
Yep.
reason why is because if there are businesses closing down, that means there's less demand for space. If there's less demand for space, as a landlord, for me to rent a space, I have to lower my rents. And when
Right.
you lower rents, value and rents are they're just aligned, right?
Yep.
If rents are high, values are high. If rents are low, values are low. So if rents are coming down, values will follow it as well. On top of that, you've got pressure from investors who, due to the risk of the market, are going to want a higher return for their money and a higher return based on the risk. So that's where it gets into a place where you see prices get affected, but whether how much or whatnot, that's to be said. But it will go down. It will go down. It's just I don't see it happening any other way, and that's not just based on my predictions or my thoughts. That's on many different higher levels of not only people in the news and whatnot on TV, but investors that I'm dealing with who have 50 million, $100 million portfolio of properties. That's what they're telling me. That's what they're looking for. And that's my job, to talk to them and just kind of be aware of what their appetite is. And that's where my information really comes from. It's just what am I hearing around here?
Yeah, what's the money doing, right? Because
Yeah, what's
everything
the
else will
money?
follow. So if you're a buyer, are you just saving your acorns right now until the right time to buy, and then you'll know it when you know it?
Well, the right time to buy is perspective, right? Because the thing is, if someone is completely dollar driven and they're saying, "Hey, I'm just going to wait until properties rock bottom per se," and that's what they're waiting on. I mean, they could wait. The interest rates are super low right now too. So, are you willing to wait to drop rock bottom and interest rates raise up, and now you're paying for it.
Affordability is still there.
Yeah, affordability kicks in, right? On top of that, too, although we all know pricing is in for a correction coming up here. Now, if you see a property on Main and Main, it's at the intersection of a light, for example, in the retail world. It's just the property. They're not going to wait. Those properties don't come around when the market's doing good.
Okay.
When markets are questionable and there's risk in the air, people get scared. They start selling it off. And that's what I've seen. There's been properties I've been chasing for 5-10 years where the owner's like, no, I'm not going to sell. They're finally coming around to, well, Tony, how much do you think I can sell it for? And there's been some of that happening. Yeah. So,
where are your investors putting their money if not in the commercial real estate?
What do you mean?
Are they, if they sell, right? So I see once or twice a month, you sold this strip mall, sold this shopping center, 3 million, 4 million. So someone just got a $3 million cash out of their asset. Are they saving it? Are they putting it in the stock market? Are they putting it in a multifamily? What are you seeing your investors are doing with their money?
They're saving it. There's in my personal database now of thousands of investors. They're literally just sitting on their money because they're very confident in the fact that they're going to get better deals down the road. So they're fine with putting the money away today, not collecting any interest on it, keeping it liquid, so that when the time is right, they're going to pounce and go and make
when that opportunity comes.
Yeah, they want to go and buy a property where it's half vacant and go and increase its value and blah blah blah. So that's what they're doing.
That's interesting. Now you also mentioned in the other spectrum, the multifamily, the duplex, the quadruplex, the apartments. What is happening in that? Is that following suit the retail space, or is that following suit the residential single family space?
Residential single family. It's still so hot. I mean, it's gotten to the point where it's for me, I get a better deal if I buy land and just build it, because it's getting to the point where there's so much competition for multifamily that it's just driving the prices up because cap rates are coming down, meaning that they look at the risk so low on multifamily that they're willing to pay and get a lower return on it because it's more secure to them otherwise. So because of that, that's where the whole development arm thing came in earlier this year with my partner and I. But where I'm getting at is that with apartment buildings, multifamily apartments, they're still in very high demand. They're still in very high demand. Now that's now. Now let's just say a few months from now, things may change, because going back to what we talked about, there was an eviction ban. If there's an eviction ban and landlords aren't collecting rent, they're not like in the commercial world on the loan side, there's something called debt coverage ratio, right? You have to make a certain amount of money for the banks to be happy. If you fall below that, which landlords will fall below that because they're not collecting the rent, the bank has the right to foreclose on it. Now, whether the bank foreclose or not, that's a whole nother situation, whole nother story, another conversation. But that's what other investors are on the sidelines waiting on now. Some are very aggressive buying it now, but some like me, like, hey, I'm just going to go ahead and build. And then if I see some more foreclosures happening in the market due to lenders foreclosing, not for operational reasons, but because they're not collecting enough rent, that's where, for me, I'm going to look at it and see if I can get into. So yeah, that's what we're expecting.
Yeah, so that's it doesn't surprise me of what I was thinking, right? Just off of looking left and looking right, of people who live in homes, that market's going to stay hot. People who are in buildings. My brother works for Amazon, and last March he got an email that said stay home until June, and then last May he got an email that said stay home until December, and then last month he got an email that said stay home until next June. So he's looking at 18 months. The Amazon literally said, hey, everyone stay home. Where he and his wife are in Florida now for the next 2 months because he's working from home, and they don't need to be. And they just bought a house downtown Seattle to make that work. I've moved home. I'm at my home office now, and I used to be the guy who showed up every day because it's just Zoom and doing things like this has made it that much more easy. And let me ask your opinion. Even when COVID is just another flu bug, right? And it's a strong flu, and COVID's going to be around. What do you expect the industry, the retail, the office to do? Do you think this is the shift towards technology that just went hyper-focused in a matter of 9 months that would have happened gradually over 5 years?
That's a great question. And the example I always like to go back to is that, pre-COVID, my parents never knew what Amazon was. They didn't really care for it or whatever. But then COVID hits. Now they Amazon everything, right? Like they adjust to the technology, and you're almost forced to learn how to figure it all out, or else you're going to be left in the dust, right? Same thing with like Zoom. There's so many people they've never heard of Zoom. They don't know what it is. They don't know what this is. But because of COVID, they had to get used to it.
Yeah.
So now going into next year, Do I think that it's going to affect the marketplace? Certainly do. I understand restaurants intimately, so I keep going back to it as an example. The restaurant industry. I mean, outdoor seating, drive-throughs. That's like top notch right now. I mean, that's gold for any restaurant right now to have drive-through or outdoor seating. That's just some of the most important terms of a lease right now. So you'll see restaurant spaces, and this is predicted in industry wide. Restaurant spaces getting smaller, needing bigger lot sizes in order to accommodate drive-through or parking or to-go orders, that kind of thing. So I think that when time permits, people aren't going to be going to the office like they used to. There's still going to be an amount of people that go into the office, and it's still going to make it work. There'll be a hybrid model, but
Yeah.
things are definitely changing, and we have to adapt to it. Adapt. They say adapt or die. I mean, it sounds harsh, but that's the truth.
Well, it's the what is the 5 dysfunctions of a team? I think Jim Rohn wrote that book. That one of it is that people just hold on to their sacred cows and they're not willing to adapt. Blockbuster was not willing to adapt,
Mm-hmm.
and they said nope, we're number one. We've got the market share, and they didn't do it. So I love what you said because it makes complete sense of outdoor seating. We just had a Christmas party with our clients and customers, specifically looking for a venue that could accommodate an outdoor patio.
Yeah.
Everyone just felt more comfortable.
Mm-hmm.
I would have had people that specifically would not have showed up if it was inside. So as you now are developing and you buy this plot of land, you have the opportunity to now develop space that's for the 2021 and beyond restaurant that says, you used to have 10,000 square feet. Now you have 5,000 with a 5,000 square foot patio
Yep.
and a drive-through access.
Mm-hmm.
And just
Exactly.
how it goes there.
Yeah, you'll see a lot of changes. Like for example, I mean, just within 5 years ago, Starbucks was already changing their model to have drive-throughs for all their locations, and
Yeah.
they were slowly letting the leases where no drive-throughs more or less expire and move out. So that rapidly is not a 5-year plan anymore. It's a very fast-moving plan. I don't know the timeline, but I know that they totally moved it up and said, "Hey, we need that now, not 5 years from now." Because that's where the restaurant world is going. There's even been restaurants. If you look up ghost kitchens, that's a big one too.
Okay.
Have you heard of ghost kitchens?
I've never heard of them.
It's exactly what it sounds like. It's literally a kitchen at a whatever location restaurant where they're marketing online that they're selling A, B, and C, and you can't physically go there and eat. You have to order it through an app, and then they'll deliver the food to you. So a ghost kitchen. That's actually becoming a very popular trend.
So
Um,
now I'm a chef. I've got a passion to have this restaurant for people to eat my food. I'm giving up the dining experience ambiance, and I'm saying I'm just going to focus on the food and deliver you a great product at home.
Yes, and then for the chef, instead of having to spend $300,000 to open up and build out a restaurant, he can go plug into one of these ghost kitchens, which is going to be far. It's like getting an executive office suite. He gets in there, he does his thing with cook, markets it, and everything's online. So he's cutting out a lot of upfront costs. And
And you can be in a warehouse and not have to pay for main and main at this stuff.
that's actually it right there. It's a warehouse, open type concept, and that's where it makes the most sense. So that's something that's getting quite popular. So you'll see that trend pick up more.
That's interesting. All right, we've got a couple minutes left. Fong Brady Tron, did I pronounce that correctly? He says, "What's up?" Did I butcher the name? I don't know if you can see the comments over there,
I
but
don't see him, but what's up?
okay, if you give the shout out back. So for the investors out there who would like to just understand commercial investing more, it sounds like if you see the great opportunity, go after it. Otherwise, save your money to get the retail office stuff. And if you see that multifamily or duplex where the numbers make sense, that's not going to slow down anytime soon. Did I summarize that?
Yeah, that summarizes it. And one big takeaway too is that short term you'll always see you'll see ups downs just like a stock, right? But if you pull out 5 or 10, 20-year plan, it's always going up. So instead of getting so caught up in the what's going to happen next week, next month, next year, just look at the big picture, go
Yep.
long, go deep, and then figure out where you want to be 10 or 20 years from now with that particular
Yep.
investment. So yeah, don't be so short sighted. To those who are kind of worried about what we're going through, if you find something that makes sense, just go along.
Just do it. And it makes sense because you have great tenants, strong tenants, reputable companies, and cash flow, essentially, right?
That's right.
I love it. All right, man, we've got about a minute left. What question did I not ask you that I should have that can just wrap up this conversation about commercial real estate and the outlook that has happened and taken place over the last 9 months?
You know what? I actually would just go back to what I just said, which was go along, be a farmer, don't be a hunter. You know,
Okay.
I'm very big on that. Was that, just don't think so short term, go long term, figure out what's going to be best for you and your family, your portfolio, when you want to retire. You know, a lot of people want to make that lottery paycheck or whatnot a year from now, but what do you want 10 years to look like or 20
For
years?
the long game.
Yeah.
And I've got your information down here below. I know you've got a couple different phone numbers and emails. Is this a good one for people to get a hold of you at?
Yep.
All
Yep.
right.
Call,
So
text, email anytime.
everyone, Tony is my go-to commercial person. If you call me and said I want to do commercial real estate, I'm going to connect you with Tony. Again, he has his specific niche and wheelhouse, yet here's what I know and trust with Tony. If it's not his wheelhouse, he knows whose it is, and he will connect you with that right person. So, Tony, appreciate it as always. Everyone else out there, if you have any questions or comments, just drop it below, and we'll make sure we can respond to you. Until then, next week, we're going to be talking with my team. We had tremendous growth. We just talked about the residential real estate growth that we've had. So we're going to say what we did to pivot from a real estate company and industry, from going to Zoom to virtual, to how home buyers and sellers are doing it now, and what we were able to do to pivot and what our plans are for next year. So stay tuned for that, and we'll keep spreading it on every Wednesday at 12:15. So until then, Tony, thanks so much, man, and we'll talk soon, everyone.
Hey, thank you.
And come on, click for me.